With the stock market tanking because of the COVID-19 pandemic, many investors are flocking to the one thing that has held value and been admired since the dawn of human civilization: gold. What's up, guys? My name's Adrian and welcome to my channel on passive income investing. I just wanted to make a quick 5-minute video to explain why every investor should have some exposure to gold in their portfolio. So the price of gold has been rising during this pandemic and has risen in other difficult economic times as well. So why is that? Why do investors shift their money to gold during bad economic times? Well, gold, unlike paper money, is an actual real physical commodity. Most millennials have no idea that before we were born, up until 1971, paper money in the US was actually backed by gold when they were using the gold standard for currency. So owning paper money meant owning a certain amount of physical gold. Nowadays, however, global governments use a fiat currency standard. This means that money is not backed by anything physical, so it has no intrinsic value. It only has value because the government maintains its value through regulations and because people using it agree to its value. It's basically like owning a rare baseball card or collectible. Physically, these things have zero value. They are only valuable because of the value collectors agree on and their limited supply. So today's money supply is actually endless because it's just paper that could be printed out endlessly. So if the Federal Reserve, which is the central bank for an entire country, starts printing out a bunch of money out of thin air, which is exactly what's going on right now in the form of rescue or stimulus packages for the economy, the money supply goes up, resulting in currency inflation, which means money has less value than it had yesterday. So inflation rates can vary year to year, but it's typically about 2% per year, which means money loses about 2% of its purchasing power every year. So 50 years ago in 1970, for example, having $1,000 actually meant you could buy $6,800 worth of stuff. But today you can only buy $1,000 worth of stuff. So this brings me to the first and most important reason why investors should all have gold exposure in their portfolios. Reason number one is currency inflation. So gold is the perfect hedge against inflation. When there's high inflation, which means currencies like the US or Canadian dollar loses value, gold is the perfect defense because gold prices tend to be very stable and actually rise during high inflation periods. In fact, whenever the stock market is making great gains, gold tends to lose value, but the opposite is also true, like what's happening right now. The price of gold has been rising and is over 1,700 US dollars an ounce right now. This is simply because investors are losing faith in the dollar, so they are moving their money to gold instead. So higher demand for gold equals higher gold prices. Reason number two is global political tensions or economic uncertainty. So gold has been dubbed the crisis commodity because people find safety in gold when there is tension between nations in the world. So we now live in a globalized economy system, so tensions between countries can happen anytime. We recently saw that tariff war between China and the US and even Canada and the US. That's just one example. Anything can happen nowadays. I mean, we had World War I and World War II. Who's to say there won't be another disaster in the future? Gold is a safe haven for investors during these times as it's considered to be a universal currency accepted by all. So reason number three is that gold is a tangible asset. So gold is a physical precious metal with valuable properties. It cannot be destroyed by water or fire, and it doesn't need any maintenance whatsoever. It's used in electronics as it's a great conductor for electricity, and of course gold is mostly used to make jewelry, which is extremely important for many cultures around the world, especially in places like Asia and India, because for them it has a deep cultural and historical significance. Because of this reason, gold has retained its value for thousands of years, and it's pretty safe to say that it will continue to do so for thousands more. Reason number four is portfolio diversification. So as investors, a key principle is sector diversification. You should never put all your money in one sector of the market, like technology stocks or oil and gas stocks. By diversifying in different sectors of the market, you essentially de-risk your portfolio. So when the stock market tanks, gold tends to outshine stocks, no pun intended, so this can serve as a small cushion when things get really bad. So fifth and final reason, gold is a great long-term investment. So there's only so much of this stuff out there. When supply starts to get low, prices will increase, providing you a really good return on your investment. It takes a long time to get a gold mine up and running. It's really hard to do that. We can't just conjure gold out of thin air. Once the stuff starts running out, who knows what the price will be. Over the past 30 years, the price of gold has increased dramatically. In 1971, when President Nixon ended the gold standard for US currency, the price of gold was $35 an ounce. Right now, it's over $1,700 an ounce. So who knows what it'll be worth 30 years from now. The point is, gold is considered a good long-term investment. Okay, so the $1 million or 588 ounces of gold question. What's the best way to invest in gold as a passive income investor? Obviously, it's not buying gold bars because that doesn't generate any income. So what do you do? By now you probably guessed it. I made another video which explains just that. So in that video, I will go over what I think is the best way to invest in gold to get consistent passive income along the way. So make sure you check it out. If you learned something from this video, guys, please hit the like button. I would really appreciate it. And make sure you subscribe so you don't miss out on my future investing videos. So take care, guys, and see you next time.